Let's look at what are the big active trades moving through the market. East African Breweries moving a lot of stock yesterday. That stock continues to edge higher. But overall, which stocks have you been taking note of in terms of the type of demand that is coming through right now?
Thank you for having me on your show. As you correctly mentioned, East African Breweries was the top traded stock yesterday. Essentially, it was a foreign block that went through yesterday. As you recall, last week we actually published a note on this particular name, and we were sellers of the stock at 190 shillings per share. So in as much as there's a lot of demand going through, we still think the trading dynamics, the fundamentals of this company don't actually hold at the current price levels. Other stocks that we're seeing a bit of interest on is KCB. Locals are actually picking up in terms of demanding the stock at the current level. That's the other name that we're seeing that's actively traded.
As you say, publishing that note, a very interesting note that has come through, because as you say, even though you're sellers of the stock, foreigners are buying the stock, but why would you be selling the stock? What are the biggest pressure points for East African Breweries right now?
I think for us, it's essentially a volume story. We doubt that they can be able to replicate the performance that they've had over the last couple of years. This year, revenues will be a bit tight in as much as it's a consumer play and you want to be placed in a consumer play in SSA. We think the trading multiples, we think our valuation based on the DCF basis, the pricing we get off this does not match what the market is willing to pay at the current levels.
So it's just a pricing issue right now. Let's move on to the energy sector, because Kenol Kobil looks like it is going to be bought by Puma Energy. Of course, that news broke out yesterday. What are your thoughts on the synergies between the two companies? What does Kenol Kobil do for the likes of Puma Energy that clearly wants to tap into the growth in the energy space in Africa?
For Kenol Kobil, it's midstream business, and the fact that it's the #1 oil marketer, not only in Kenya, but in East Africa and more increasingly in Central Africa, puts it as a great purchase for Puma Energy, which is looking to get into a similar kind of business. Notwithstanding the fact that Kenya has actually been put in the global map in terms of its oil potential, and the fact that Tal Oil actually came up with newer pronouncements in terms of the additional oil that they've been able to tap into, definitely makes Kenya a go-to zone. And if you're looking at Kenya, you want to be looking at Kenol Kobil, which is a local company. However, I mean, you must know that the stock has actually been suspended, and I think this is a positive for the counter as we stand.
As you say, the stock has been suspended. Let's look at that stock price, 12 shillings 50. What are your thoughts on the type of premium that might be attached to the deal if it does go through?
I'm not privy to the contractual terms between Puma and Kenol Kobil. I suppose the advisors would know best. But what I know is that the suspension by the CMA is definitely positive for Kenol Kobil, because you don't want to have speculative activity driving up the price and maybe pulling Puma out of the whole agreement that they've come upon at a particular price. So I think that the speculative activity and the suspension of the stock should actually work in terms of steering the deal forward.
Let's take a look at Total Kenya, because on the other end of the spectrum, it's a stock that hasn't performed as well as the likes of Kenol Kobil. Just looking at their first quarter numbers, posting a loss for 2012 in the first quarter. What are your thoughts on the prospects for this company as it tries to regain its footing and it tries to regain those margins which have been under pressure?
I think for this company, the results are essentially being eroded by financing costs. It has a lot of expensive debt that it needs to restructure. Again, something that I'm not privy to. But if they're able to restructure this, I doubt what better rates they'll get in this kind of environment. Then it could probably help their bottom line. But that said, I think you're seeing they've been losing a bit of market share, and this has actually gone to Kenol Kobil, essentially because of the new products and services that they're coming up with. So Total is not in a very good place in as much as it's in the same industry as Kenol Kobil, essentially because of the pricing mechanism and of its loans, and secondly the fact that it's not as flexible as Kenol Kobil in terms of its products and services.
Clearly, we've seen that playing out in, of course, the share prices. Taking a look though at the banking sector, KCB moving a fair amount of shares yesterday, 3 million shares, and that's of course as it's opened up its branch in Burundi. That would make it have a presence in all East African countries right now. So what are your thoughts thoughts on KCB's spread across the region? Is it well diversified in terms of the touch points that it has in East Africa right now?
Yes, it is, and we're still buyers of this name, and we think there's a lot of potential that it has to unlock. Moving its operations to East Africa, it also plans to get into other countries in Africa and become a Pan-African bank. I think what's helping them is the fact that they've been able to integrate its IT system into its business strategy. So anytime they're going into a new country, it's a matter of plug and play, and you don't need to start setting up a branch afresh from in terms of operations, etc., because everything is centralized and backed into the Kenyan operation. So they are definitely sitting in a good position as of now.
Let's talk about their first quarter results that came through, because there was an indication of somewhat of a restraint in lending, just looking at advances only up by 1.1% on the quarter. What are your thoughts on the type of strategy that KCB has employed in light of the high interest rate environment that Kenya has specifically right now, and of course Uganda and the likes?
Lending is definitely going to slow down, and the worst is yet to come on board. You must recall that for the first quarter results, there's a bit of backlog coming in from loans that were actually written up last year. So the impact has not actually been felt. If you look at the full year numbers at the end of the year, the growth rates will be much lower than what we saw last year. So again, the worst is still yet to come. I think what the banks are focusing on, KCB included, is focusing on transactional incomes. How much income can you get from the kind of infrastructure that you have? How many people can you get to use your ATMs? How many people can you get to use your point of sale? How many people can you get to conduct their transactions using the infrastructure that you have in place to be able to generate more revenue as opposed to relying solely on funded income, which has been the case?